So guys, I'm here to tell you I messed up, and I mean I messed up big time. But what if I told you there is a way to turn around that big mistake and turn it into a huge gain? I mean like up 50% so far and continuing to run up. Not by selling or trading my way there or any other crazy option strategy or anything else like that. Just by basic fundamental investing. I'll give you the whole journey today from down 50% to up now over 50% and everything kind of that happened in between. I just ask in exchange for you to gently tap that like button and consider subscribing too. It's super easy to do if you like the truth without the hype. So how many of you guys got caught up in the hype of the 2021 craziness run? I mean, comment down below if you actually, got caught up in that hype run. It's okay to admit. Now, I'm thankful with this stock, I didn't get caught up in that. So I didn't buy this stock at the highs in the 70s or so. I didn't get caught up with that. But the bad news is I still bought way too high because of course I bought the massive dip because of course it came crashing down. But unfortunately, that still wasn't the best buy that I could have made, and it put me in a very, very difficult spot. Now, my largest buys were at $26 and $27. That's what makes up the vast majority of my shares of this stock. However, that doesn't mean that it was a great price or anything. Obviously, down from 70 down to 25 is, obviously a lot better than owning shares at 70. But the point is that that's still not a great average to have, especially when you kind of see what happened next with this stock. Basically, the nightmare scenario happened, guys, and we all experienced it last year. Basically, not only did this stock have earnings decline, and really it just a rough patch was what I would call it in earnings, you also had the market completely selling off and completely tanking all the way around. I mean, everything sold off, guys. I mean, what? Meta, Google, Amazon, the biggest of the big companies, the best of the best companies were all selling off. So you can imagine what happened to these smaller cap stocks when they started selling off too. I mean, really the only stock that really made it through relatively unscathed was Apple. And outside of Apple, everybody else just got destroyed. Well, I guess old man stocks didn't get destroyed either. But the point being, in the growth stocks, the stocks that we all love and want to buy and hold, those right there, they just all basically got crushed except for Apple. So basically, bad earnings and a market crash equals a disaster recipe for this type of stock. Oh, I guess it may help if I actually tell you this stock. The stock is DraftKings, guys, and then that's a speculative stock. I put it firmly over in that speculative category, especially last year. So that right there is the stock that we're looking at, and that nightmare scenario happened to it. You had some not so great earnings mixed in with a market crash, and it just turned into a disaster for anybody that owned that stock in general. But thankfully, I had two fundamentals that I used with this stock that I use every single time that I'm working with a speculative stock, or I'm looking to buy a speculative stock, or I bought a speculative stock, that kept it from being even worse than what it would have been if I wouldn't have followed these two fundamentals. The first is position size for a speculative stock like DraftKings or any speculative stock. And what I mean by that is if it's speculative, the position size needs to be small, guys. Now, I'm not telling you don't own them. I'm not telling you not to buy them. But it, to me, in my opinion, is absolute lunacy to have 25% of your portfolio, 50% of your portfolio into speculative stocks. Speculative stocks by nature means they could go to the moon and be maybe the next Apple or the next Tesla or whatever. But there's just as much of a chance at these early stages that it's the next stock that's going to zero and going to be bankrupt as well. So the way I control that risk is through position size, and I keep a very, very small position in the stock. So thankfully, even though I obviously clearly bought wrong and then subsequently lost, about half of my money, the position size was small, which of course made it a little bit easier to stomach. Not that you can stomach it and not that anybody wants to lose money, but the point being, because I didn't have half my portfolio wrapped up in it, it made it a little bit easier to handle as it fell. And the second one is because that position size is so small, it makes it much easier to basically let the stock do what it's going to do, which is what speculative stocks do. They run way up, they go way down, they look like they're going to be the best thing ever. Then they go all the way down to where they're going to zero and they're going bankrupt and everything else in between. It allowed me to basically hang on to that stock regardless and actually, look at the business, look at what's going on because I didn't have that fear of it going to zero. So basically, I could continue to do the due diligence on this stock and continue right on with my plan because I have the right position size and I don't need to freak out whenever the price moves. So that's really the second point there is if you got your position sizing right, it allows me to not freak out on those price moves. So that really is the second point. I guess I should have said that up front, but I didn't. But anyways, it's a long day, guys. Anyways, the point being, because of that, I didn't need to freak out whenever the price fell. There was no reason for it. I had the position size right, and it allowed me to continue right on with my plan. And this kind of leads us perfectly into the next page, which is how to turn your big losers into big winners. Basically what to look for, what to do when it happens, and then how to execute on that. Now, you're right. I could have just sold and then tried to trade my way back or, play any of the other games that everybody was pitching you guys should have done last year. And as we all saw, it really didn't work out well for those folks that were getting in and out of positions and trying to trade this and option that. And, the market's ridiculous, guys. Trying to predict those short-term movements is impossible. Warren Buffett says it's impossible. Everybody who's been in the market for any length of time says it's impossible, but yet people want to continue to do it. So I know that strategy didn't work. So that absolutely wasn't the strategy I was going to implement with this stock. Now, part of owning, and this is kind of the next phase here, part of owning a speculative stock is knowing when to grow that position out larger from that initial position whenever you decide to buy the stock there. And we actually have a full lesson on it in my group. It's actually a part of the stock course you can take that'll give you even more details behind it. It's actually fairly long. It's one of my longer videos that I have in there. So we're not going to do that here today. Nobody wants to hear me talk for 30 minutes, guys. So I'm going to give you guys kind of the short, sweet version here. And don't forget to check out my group if you want the full link lesson on this, along with the stock course, along with the 4 other courses you can take along with the stock course. And the stock analyzer tool is right here, guys. We're basically working on accesses right now for all the members. So all the members have access completely free to use that stock analyzer tool. And this is just the beginning, guys. There's a lot more phases coming. You got my watch list for price targets. You can see all my buy and sell alerts in real time. You get access to the best 6 and 7 figure Discord out there. There's so much, guys, hundreds of tutorials. There's just so much down there. Check out the pinned comment. I may have left something special down there for those of you guys that sign up ahead of time. So the concept basically kind of boils down to this. When you have speculative stocks, you keep that position size small until they prove that they have earned more of your dollars. So what I mean by that is basically you're waiting for them to perform on earnings. And as they perform on earnings, you are taking a look and saying, hey, I need to add more shares to the stock as they continue to perform. Do they have that path to profitability? Are they performing to that path of profitability? You're looking for a lot of things like that. And as they do that, you're basically looking at, okay, great. Now let me look at the valuation I have for the stock. Let me see what the price is. And then let me decide whether or not I'm going to buy that stock or not. You don't strictly buy the stock just because of the stock price. If DraftKings would have continued to fall and fall and fall down to the levels where I finally started buying, but they weren't performing underneath, I'm not putting any more money there. It doesn't matter. A non-performing company, who cares if you average down? You're still losing money in the end if they happen to go bankrupt. We just saw that with a lot of different retail stocks that are out there, where a lot of folks were, averaging down despite the fact the company was not performing underneath. And all it meant in the end was you ended up losing all your money. You just threw more money into it. Sure, you had a lower average, but you ended up overall losing more money than you would have if you wouldn't have put more money into it in the first place and just had that higher average. Because regardless of what your average is, whether it's, $25 or 25 cents, zero is still zero in the end. And that's kind of where that could go. So it has to have that performance that then earns your dollars, but it's not just strictly based upon the stock price, It is based upon the stock price, the valuation you have for the stock, because I'm not buying up in a hype run either, even if they are performing underneath. I don't want to overpay, right? I don't want to pay $70 for DraftKings, even if they are performing, right? That's way overvalued in my opinion. I want to pay a lot less than that. So you kind of, when we got it last year, you got the exact opposite scenario where the stock price continued to fall. And that's the perfect scenario as a long-term investor, is the stock price continues to fall, but they start performing underneath. So they went from having bad earnings that weren't terrible, but definitely not positive, definitely not what you wanted to see from the company. They turned around the ship per se, started having more positive earnings, but so the earnings are going up and getting better, and the stock price continues to trend down. That's exactly like the perfect scenario for a long-term buy and hold investor that you want to see. And that's exactly what played out with DraftKings. So sometimes after each quarter, I will just allocate a chunk of money and pour it into the stock. At other times, I kind of implement different strategies. Of course, you can just straight DCA. You basically stop your DCA when they're not performing, continue your DCA whenever they're performing. A lot of different strategies you can implement there. For me, because of just all the, last year I put more money in the stock market than I've ever put in the market because the deals were so ridiculous. I took a little bit of a different approach here with DraftKings. Basically, at the beginning of November there, I just doubled up my position. So I essentially at $12 and some change, I essentially just doubled up my position altogether, all one lump sum right there. Went on ahead and made the buy and really knocked my average down a lot. Now we're just right around 20, maybe we're a little bit under 20. I'm not real sure. I guess I probably should have looked before I decided to push go on the video. But nonetheless, the point being, I essentially doubled up my position, knocked that price down, and now I'm sitting on over a 50% gain in the stock. So it went from a 50% loser to a 50% gainer in my portfolio. Oh, and by the way, I own twice as many shares as I did before when it was a loser. So it ended up being a win-win overall. And this is exactly how you take a speculative stock like a DraftKings, and it's not out of the woods yet, guys. It's not, but it's definitely trending in the right direction. But that's how you take that position and you slowly build it out here. So hopefully that kind of gave you a little bit of a insight into how I did that. And of course, if you want all the details, you want the step-by-step process, you want basically a group of investors like me and those in our group helping you through that journey and helping you develop that plan and work through a lot of these different concepts, make sure you check out the pinned comment down there and get your membership, which, like I said, there's a little bit of a surprise down there. We do have a stock analyzer tool that's coming. The price of the group is going to go up after that stock analyzer tool is formally released. And, it's just kind of all part of it, guys. I'm trying to help everybody out as much as possible. There's a ton of information in there. I don't think anybody else is offering nearly the amount of courses, tools for you to use, Discord, videos every other day, sometimes every day, sometimes more than twice a day. Just so much down there. Make sure you check out the pinned comment and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here if you want to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.